What are trend lines? How do we use them? Why is it so important? Why do people keep talking about this concept of trend lines? What is the relevance of trend lines in the trading and investment world? We'll try to understand and break down the importance which trend line holds for every trader in making their day-to-day trading and investment decisions. Hi there, my name is Hitesh and I welcome you all to YouTube channel of Trade Brains. If you're new to our channel, please comment, like and subscribe, and don't forget to press the bell notification icon. Now, what are trend lines and what is the relevance of them in the wheel of trading? Let us try and understand. But before that, let us try and understand what does trend line means. So according to Investopedia, trend lines are easily recognizable lines that traders draw on charts to connect a series of prices together or show some data which best fits. The resulting line is used to give the trader a good idea of the direction in which an investment value might move in. So in simple words, trend line would simply mean connecting points which are in tandem or which are in a certain direction. It could be up, down or a straight line. If you connect those series of points which makes sense and which makes a straight line, a trend line is formed. The most important criteria for joining a trend line is that there should be as many points as possible on the trend line for a trend line to hold any significance for trader in making their decisions. Now, the next important point is why should one use trend lines? Why is it so much talked about and why is it so important? So, trend lines have a tendency to give you more accurate data about the levels. So, with the help of trend line, you can more or so pinpoint the exact levels where the market could be touching or where the market could be breaking out. But in the case of support and resistances, you can actually have an idea of the zones. So if you want more accurate data or you want more pinpoint target for your trades or you want more pinpoint entry points or stop loss for your trades, trend lines are more useful than supports and resistances. Support and resistances gives you broader range, but trend line gives you exact number or exact data point. Now trend lines are also used to understand the long-term trends. Supposedly, if the market is trading continuously above the trend line and we see upward momentum, so we can easily say that the market is in a bullish momentum over a period of time. Similarly, if the market is trending down, if the market is again touching the points on the trend line coming back again, we can actually make a relevance out of it, saying that the market is in a bearish momentum and trend line is acting as a resistance for the market. So with the help of trend line, we can actually figure out what is the long-term trend or what is the long-term likeliness of the product to be moving. Trend lines are very useful when you want to understand your entry and exit points. When I say entry, supposedly if you have a bullish view on the market and you want to figure out what is the right point to enter. So try and draw a trend line using the connecting the important points, and as and when the market comes near the trend line, it gives you a point of entry. Similarly, if you're having a position and you want to keep a stop loss, you can keep your stop loss simply below the trend line. The market triggers that, which means the trend is broken and we could be heading towards a new trend. So trend line is very useful when you want to determine the entry and exit points for your trade. Now this is a simple chart of Pidilite Industries, and now I've drawn three lines. The two lines which are parallel to each other is trying to kind of show you the zone or the zone of support and resistances, and the line which is coming from top to bottom is showing you the trend line and the upward momentum. Now if you look at this zone basically doesn't tell you the exact levels but tells you the price range within which the product might be trading. But if you were to look at the trend line, it tells you exact points where the market could be testing and going back up. You see 4 to 5 points where the market exactly went to a trend line, and we saw the momentum of bullishness being continuing in the market. So if you had a bullish view on the market, you could simply wait for the market to come to trend line, enter a long, keep a stop loss below previous low and ride the gains in the market. If you had entered any point on the trend line, the trade would have given you minimum 20 to 25 returns on the investment which you made. So that is the power and beauty of trend line. So trend line pinpoints the exact levels, and support and resistances give the zone within which the market could be trading. Now, most importantly, how not to draw a trend line. This is a classic example how one should never draw a trend line. If you look at this chart, there are 4 to 5 different trend lines, and each and every one of them is giving different signals. At certain points they were valid, but they didn't hold significance for too long. Once a trend or a trade line is broken, please remove that from your chart because it will unnecessarily add confusion into your trading and your chart would look like this and you wouldn't make any sense out of it. It looks like someone scribbled on your chart and you have no idea what do you understand by this. Rather than this, the best way to draw a trend line is determine the time frame of your trade. Now this is important. If supposedly you're trading for an intraday, try to draw a trend line which is short term or intraday in an hourly chart or a daily chart. If you're someone who's looking to trade over a period of time, maybe a week or a month trade, shrink the chart, put as many candles as possible on the chart, and then try to connect the point and draw a trend line out of it. Have as many candles as possible on your chart. How do you do that? Just shrink your chart and try to fit in at least 150 to 200 candles within your picture, within a frame, and try to draw a trend line out of it. So it will give you a broader view, and it also from your long-term momentum or view in the market. That is the best and the easiest way to draw a trend line. Now, the most important thing which I want to say is that you shouldn't have to be looking too much into the chart to basically find the momentum. The momentum should be glaring in your face. Okay, this looks like a momentum and this could be the points of trend line. If the trend line is formed using that judgment, those trend lines have better relevance for you while trading. And the best way to draw a trend line is connect the major swing levels. Don't connect the points in between. Look for the swing highs, swing lows, swing zones, and try to draw a trend line out of that. If you do that, it actually tells you that the momentum of the market is being caught from end to end. You're not entering in between. You're capturing the most important points and then trying to draw a trend line based on that. Try to connect as many points as possible. In theory, if you draw any 2 points, you can draw a trend line, but that trend line would have very little significance. If you have 4, 5, 6, 7, 8 points supporting your views on the trend line, they have better confirmation and they have more relevance and reliability. Now this is a simple chart of State Bank of India. Now if you look at this, the market is coming from up to down and we see a downward slope in the first line. We tried to connect as many points as possible. We connected about 5 to 6 points and we draw a trend line, and the market was in a bearish momentum till the trend line was broken. And once the trend line got broken on the upside, if you see it on my screen with the cursor which I placed, the market gave a return of nearly 40% on your trade. Now the second trend line, which is coming from bottom to top, we saw 5 to 6 points connected, and the market, once one traded below the trend line, it gave a return of nearly 30% on your trade. And again, once the market went up, we saw market going above the trend line and the momentum carried with a return of nearly 40, 50, 60%. So trend line broken on the upside or downside always gives you decent trading opportunities. Try to connect as many points as possible and try drawing as fewer lines as possible. Don't have too many trend lines on your chart because you might get confused and you might end up taking a trade which is not valid at that time. Now this is another chart, and this is a beautiful swing chart of BHEL. Now if you look at this chart, we have drawn a trend line by joining 4 points. Now the swing highs are being connected over a trend line. So as and when the market went towards a swing high, it gave you a decent shorting opportunities. All the trend lines don't give you buying opportunities. Trend lines give you selling opportunities. Trend line gives you equal buying opportunities. So this gives you a very good selling opportunity in the market. The market as and when touched the swing highs, the trend line was formed and it gave you a decent shorting opportunities. And every trade gave you a very good return on the investment which you made on the trade. Now you might argue that this is a point when the trend line got broken. You always have to keep certain conservative stop loss. You can't have an exact pinpoint stop loss for the trade. Trend lines, although are meant to give you accurate levels, but you always got to have some buffer or some leeway has to be given for a trend line, because market doesn't always go to exact level. It can always have a deviation of 2 to 3% on the entry or exit points. So the whole idea behind showing this chart was that if you are connecting the right levels at the right point, trend lines have a tendency to give you a very good risk to reward rates, and it also gives you an idea about the long-term momentum in the market. Now this is again a chart of Titan Industries. Trend lines are also useful if you want to construct the zones in the market. If you look at the lower line, we connected about 5 to 6 points on the chart, and as and when the market came to that chart, it gave you a decent trade and it gave you a return of nearly 7 to 8% every time you took a trade. You got stopped out once, but you made money about 5 to 6 times on this trade by taking a trade with the help of trend line. And if you draw 2 parallel lines, you get the zone within which the market is going. So one trend line acted as support, other trend line acted as a resistance on the upswing in the market. So with the help of trend line, we can also draw your zone of support and resistances, or the zone within which the market is trading, and it also gives you the point of entry and exit for your trades. So I hope this video was informative in understanding how does one draw trend line, how does one not draw trend line, and how is trend line used to understand the overall momentum and long-term perspective of the market. I thank you for your patient hearing. I'll again see you in next video of financial education. Thank you so much.